But yeah, Matt Orton is here to talk about what the global setup is looking like. And Matt, I guess, while the wait is all for April 2nd, there's already a 25% tariff if you're buying oil from Venezuela. Which way do you think this is headed?
Hey, good morning. It's always great to join. And I think it's anyone's guess with respect to where we're going on some of these random tariff pieces of information. But I think the general trend of where we're going was announced over the weekend is that tariffs perhaps might not be as bad as we think, but we still don't know exactly what might be in store for us on April 2nd. So when I've been having conversations with clients over the past 24 hours, I think my message to them is still the same, that any of the hyperbole, the excitement over a recession, or I should really say the fear over a recession in the US, perhaps transmitting globally, I continue to believe all of that is overdone. I think what we want to focus on is once we get past April 2nd, let's wait for earnings seasons to start picking up in the US and then in Europe and across the rest of the world, because that's where we're really going to get the most information. Company management teams are going to be the most clear with us with respect to how they think tariffs might impact their overall businesses, how they might impact their specific consumers. And I think it sets up for an environment where we've had a lot of pullbacks over the past couple of months. The baby's been thrown out of the bathwater in a number of different sectors, especially anything that's been higher momentum related to artificial intelligence. And there's a lot of good values within the rubble that has been thrown out. So I'm waiting until a little bit after tariffs to start picking up the pieces, but I'm very encouraged by the backdrop of what I'm seeing over the past couple of trading days globally.
So Matt, you'll appreciate the pun intended. What we should expect from Donald Trump from on 1st of April, April Fool's Day? What do you think we will hear from him?
Well, I think, if you listen to his State of the Union address, I believe he said he didn't want to announce anything on April 1st because people might think it was an April Fool's joke, and he wants them to listen on April 2nd. So I think he's trying to have a little bit of fun with respect to the severity of the situation. But I do think he's quite serious with respect to tariffs, or at least imposing tariffs on those who he believes are trade villains. And I think that's the key difference. I'm not sure how reciprocal the tariffs are going to be that we get on April 2nd, but I do believe that tariff villains are going to be penalized. I think China is going to be caught up in a lot of this, especially because we're touting this meeting with Xi that could be a good starting point for negotiations. But I do think that once tariffs are in place, which could be higher in some cases than investors are expecting, they're going to be targeted. And from there, that sets up the point at which we can negotiate things lower. So again, I think if you have any volatility around April 2nd and what might be announced, I think once we get the news, that's the time to start looking at high quality investments where we don't think the secular growth trends are going to be changed, and starting to pick up those investments at a discount because their fundamentals still remain in place.
There are two scenarios. Tariffs are rolled out on 2nd of April as expected. How will world change? Tariffs are not rolled out as expected. In fact, they're delayed or deferred. Then how will world react?
Nikunj, I honestly think I'd rather have everything announced on April 2nd so we can just get it over with. I'd rather know exactly what we're looking at and know the base at which we're starting to negotiate. But from my investment perspective, I don't think it matters all that much, because I don't think the tariffs are going to be put in place to impose a recession or slow down growth meaningfully enough to get us from about 2% GDP in 2025 down into negative numbers. I don't think that's in store. And so for me, when I look at my global playbook in the US, I think you continue to lean into financial institutions, especially bigger banks. And I think that really plays across all domestic and international markets. I've liked Indian financials for quite a while. I've liked European financials. I think that trade remains in place. I also think a lot of some of the higher growth names, particularly those that have margin and earnings that might not be caught up in a top line story if you are concerned about growth, such as some of the mega caps that we've seen rally back, I think those set up really, really nicely as an investment, regardless of what happens through these tariff announcements. And I think India in particular is very interesting. China's been the hot dot with respect to emerging market attention lately, but I think this rally back in India is going to be sustainable. I'm encouraged by the breadth that we're seeing support the rally that we're having in India. And I think India can escape some of the worst of the tariffs, or at least quickly negotiate them down, being that they are a true trading partner of the US. So again, I'd look to pick up any high quality investments that might sell off in India as a result of April 2nd. But I don't think it's a reason not to own the market.
Quite interesting, Matt. Great to have you on the show today with your thoughts.
Thank you.
If you like this video, then like, share and subscribe to ET Now.